Okay, good morning, traders, and welcome to Trade the Structure. So, just having a bit of a recap of the US markets from overnight. I thought I'd do it on a video rather than post out all the charts this morning in a bit of a rush. So, we've got the S&P, the US, and the Dow, Nasdaq, are all down overnight, but they were down, coming into the start of the US session, and they look like they pretty much held those losses. They did have a bit of a push into lows and sort of rebounded off the lows slightly. You can see we've got the S&P, the big S&P on the screen here. We look at the daily charts. So what I'm going to do is just go over the daily charts over the main markets, just to get a bit of a broader overview. I mean, we can look at the 30-minute charts for the intraday action, but I just wanted to have a bigger picture of the bigger daily charts, across the board, and just what we're seeing at the moment, just to keep an eye out. So, we are bearish. You can see this is the S&P. The market's definitely down. We were having a bit of a bounce, but it looks like potentially we're holding another lower high, and that's the same across the board. You'll see on the Dow, the Nasdaq. Holding a bit of a lower high. The most recent move down was from this level here at 49.50 thereabouts through here. It's pushed down. I think I've got a major support, not a major support, but a potential support area. You've got all these little lows that it could find support, but at the moment it looks like just because we fell short of that level around 33, 35, it looks like it's bounced up a bit of bullish, a bit of a bounce there. Sorry, a bit of a short squeeze of this leg down, and now we're starting to head south again. So, everything's heading down at the moment. We've got the Dow. Bias is definitely down, and this is the bigger picture. That we had that channel up there, and we've broken down out of that channel, longer term channel, and you can see that it's been rolling over for quite a while now. And the same sort of scenario, we've held the lower high up here, 33,155, had a bit of a leg down, had a bit of a bounce, and now potentially we're starting the new leg down. The good thing is, you just look at we are sort of hovering around that overextended level on the momentum. It doesn't mean that it can't keep going down. It could sort of consolidate, chop around here as momentum picks up. Momentum gets back to the zero line or MACD, starts to roll over again, and then you're back in the downtrend. Okay, so really, either way, we're biased down. We're definitely biased down across the board. Okay, Nasdaq. That's a key one here. Still same sort of scenario. I thought it might have had a decent bounce up towards this level at 13,125. This sort of leg would get a bit more of a bit more juice in it, but instead it sort of failed pretty early. We're back down to the 11,600 lows from previously. It's heading south. There's a potential it can get down to 9,600 if we keep continuing down. So at the moment, this level for me, it's got to hold the pressure down if it's going to continue 12,205. So okay, this sort of zone through here. All right, so if that continues to hold, we might chop around here and then continue to extend down. All right, so momentum is, it is sort of picking up slightly. It could have a bit of a drive back up. We might find this is a bit of a base, and we're starting to build a longer term base, which means a deeper correction up, and then we'll have to go from there. So if that's the case, we might sort of correct back up to this 1325 area, but still. The major trend you can see is down. We're sort of teetering on sort of the oversold area. It doesn't mean we can't keep going down, but at the moment, it's no reason to be diving in left, right, and centre trying to pick a bottom. Go over to the DAX, European markets. Now, DAX has been hit quite hard. This is something we've been looking at for quite a while. First leg down, secondary leg down. I haven't talked about this for a while, but it still stands true. 14,583 is the retest fail. RTF is holding there. Just get rid of an alarm there. RTF is holding there. It's holding the pressure down, and this market's starting to extend down. Okay, had a bit of a bounce up to here, and it's been extending down for quite a few days. Had a bit of a pause in here as the US is bouncing, and now it's really starting to take hold. Bears are starting to take hold again. I would expect it's going to extend down to 11,350. Now it's about 1,200 points from where we are at the moment, but there's no reason why it can't really start to drop and start to fail. Okay, so the markets are squeezing out longs. Okay, squeezing out buys at the moment. So if you're looking to go long, you just want to be pausing until you see some sort of confirmation off a higher low. Okay, on the main indices, if you can get your high low on the main indices and you look like we're going to start to head high in the indices, then you can start looking at some stocks you've got your eye on. Okay, UK, that looks a bit better than the rest. Okay, so we've got this nice little uptrend. It keeps failing at this level here through 76.80. This level has failed quite a few times on a daily basis. Fail again. It had a bit of a pop up there recently. It failed off that level. We tried to go back up as a bit of a retracement, and we're starting to fail from this inside level of 73.13. Now, the fact that we just sort of we ended above, it's not a major level, but the fact that we ended above at the moment, then we obviously sold off. We could find that we start to find this kind of action hold again. Okay, doesn't mean we can't, or if we don't, we failed through there too far, then you're looking for that lower high to pressure the market down. But at the moment, it is still going down, but it's not the same as, say, the Dow, the S&P, the Nasdaq, and things. Okay, over to the ASX. ASX is not looking so crash hot. On a daily basis, we've got major resistance at all-time highs up here and at 76.10 area, 76.15 through here, touched 3 times, got up there, failed off it. And you can see just getting through this level is a bit of it. That's why you would call that a double top. Once you start taking out the anchor to the uptrend, you're not just a double top because it touches that area twice. It can easily, a little, I guess this is what I'm looking at. So that's your most recent high or low, and you start to do this thing, you chop around, and then you fail off it. That's not a double top because you haven't broken the anchor. When you break the anchor like this, you get through it and you start to test back into it, then it's a different story. Okay, that's a more of a stronger level to me. Okay, so when we fail off that again, we worked our way back up, so we failed a third time. So you're looking at the triple top RTF. Okay, now we've got this shoulder, lower high to work off. The market's pressed all the way back down to this 63.84 area, and it's still heading down. We're still holding these lower highs. Okay, it's whether this market's it's probably going to open about break even, I think, on the ASX, but we could start to press into that, today. It's the first of the new year, new financial year, so we might find that it sort of flushes down and start to hold. People start to buy in. Who knows at the moment, because the markets are in a downtrend. Okay, so just be wary of that open. We'll get over to the Asian markets now. We've got the Nikkei. Nikkei on the daily basis, it's not as bad as you think. It's been under pressure for quite a while. A major double top here at, say, 37.50 through here. Then you've got this retest fail through here around that 28.285 area, this zone through here. So the market's down, but we actually flushed this low and held and bounced up off it. So at the moment, you've got a minor one on an inside level at 25.265 through here. And you've got the major. So this is a major with trend. I think that's starting to pressure down. I would expect this one to hold and the market sort of start to pressure down through this level and start to look into that 24,000 area. Okay, in the Nikkei. I think that's fair play considering where the markets are at the moment. We test that, then we start to see if we can start start to step in there and start to hold it up. All right. Seng. Hang Seng, one of my favorites. You're starting to see bigger picture. You've got all these levels. Let me just scroll out a bit. Okay, the market's traded into this. It's a good level through here, and it's reacted up and off that zone. So we've got this higher low, and we've come into this zone 22.380. Got it. 22.380. We've tapped on that, and we have reacted down and off, but it's not a serious reaction off that level at the moment. Okay, so if we start to break down this leg up, we start to do something like this, then to me, we're gonna start to head down back into this major support level and potentially breaking that off this RTF here. Okay, but if we start to hold up, we could easily back off. In the US, we don't break it today. We still hold this uptrend on a daily basis, and the US starts to rally. Then we could fly up straight up and through. Then you've got this high low working, and the market's starting to pressure higher, potentially up to this 24,900 zone, up to this most recent lower high. But at the moment, it's a bit of an each way bet. You're in prime position. I feel that you can see if you scroll out, we touched this level, sold off. Once the momentum moved back into that zero line, we sold off. We sold off. So we're back there now. So there's no reason why we can't sold off. Structurally, it doesn't look too great. Okay, but we just want to bear that in mind. If it does start to flush down and we get this big ramp back up, then be careful that we're not going to take her out and squeeze out a lot of shorts. Okay, over to we'll get over the dollar. Then we'll start to wind up a bit, get over the dollar, some oil, gold. We've got dollar index. This is a daily chart. We scroll right out. We've got major support through here, which bounced off quite a while ago. And we had this big run up. Okay, took out the daily highs around this sort of 104, 105 area through these daily highs. Now we're just holding above that. Now the US dollar, someone's asking me, could it keep going up? Okay, yeah, it could keep going up, but it's all based around inflation expectations now, and how much of that is baked into the price. All right, so the higher the US dollar, if it keeps going higher, it means their expectations for inflation are not changing. They think inflation is going to keep creeping higher, but at the moment, as long as the Fed comes in, they do start attacking it, like they said, a bit more aggressive towards inflation, and they did say a couple of days ago that they're going to make that inflation's a priority, not economic growth. Okay, if economic growth has to suffer because they're getting inflation under control, that's what they said they'll do. Whether they do it's a different story. Okay, the Feds are usually all talk and pretty lame action, but That's what they're saying they will do, which means that I would expect this US dollar to be capped because they're going to be more aggressive with their rate rises. I don't know when the next one is, but it's coming soon. They're looking at raising. They said they probably won't raise it 3/4 of 1%, 75 basis points. They'd probably raise it half a base, half 50 basis points, sorry, half percent, which is probably in line with market expectations. But I think that won't push the US dollar down, and it'll probably keep it chopping around that, around these highs of 103 to 104, 105 area, okay, just above these highs. So if that's the case, then it's going to continue to keep pressure on these commodities, especially gold. Gold's under the pump. Look at gold now on a daily basis. A lot of people, like I was again speaking to someone yesterday. Gold for me, it's an inflation. They're talking up inflation hedge. What do you call it? Safe haven. It's neither of those at the moment. You could understand it's just not happening. If it's not happening, there's a reason. If you don't know the reason, that's irrelevant because what you're seeing on a chart is what you're looking on a chart is, it's a pure price action is what's happening. Okay, you don't question why. I mean, you don't try to be a genius and figure out why is it doing this. You can. It's all great, but you got to trade what you see. That's pretty much what I'm trying to say, I guess. And if you're not seeing it's not an inflation hedge because it's been going down, it's not a safe haven at the moment when the market's getting hit, it's not going up. Then, sorry, I meant to say when it's inflation hedge, it should have been going up. We've had all-time inflation, and gold is not going up. Okay, and the same with the safe haven, it's not going up, so it's not getting bought up as the US is getting hit like it did last night. Gold was actually down. You can see it down. Well, it's only down $1.75 now, but it was down about 10, I think $10. It's trading around 1805, so it's coming into the support zones. It's just taking out this low here. I would expect it to get down to this 1784. Okay, that looks like from a daily basis that's where we're heading down to. But the bigger picture, if this is a legitimate, which I feel that it is, legitimate support zone through here, you can see it's just missed it here, tapped on it 1, 2, 3, 4. It's tapped a few times. It's broken. Okay, we've got a major daily double top here. You got a lower high in play around the 1870, which is pressuring the market down. Doesn't mean it can't get through that 785. We might be looking, for a move down to here. Okay, 1673. No reason why we can't. Technically, that's what it's looking like. On the MACD, it's looking like it's set to roll over as well. Okay, so be very wary about buying into gold at the moment and buying into the hype of, inflation hedge, safe haven, gold longer term is going to go up. Yeah, maybe longer term going up, but if you're going to buy it here and it goes up from 1670 level and only gets back up to 18, you're still underwater. Okay, so it's about where you get in, where you enter at the moment. There's no need to buying long. You'd be better off shorting it. Okay, that's my opinion anyway. That's what I feel. So until gold starts to change its stripes a bit and does something different, then I feel it's heading south. Okay, over to oil. Oil, this little uptrend here. Just mark that a bit closer. We reacted up and off that 103 area, bounced up. Get rid of those, bounced up. Now we're heading south again. A good little sell-off, so it's good for the petrol pumps. That's nice. It's pressing back, potentially back down to that 103, the low 100s even. It may just bounce up somewhere around here. We might find that it pressures in, holds this trend line, respects that, and starts to work its way back up again, or we start to break through that level, and then you start to get maybe something like this. Okay, so that's what ideally I would love to see, but I feel that being such a manipulated market, it could easily just hold this trend up. Bit of a flush out of some of these longs, buyers. Okay, squeeze them out, put the late buyers back on the sidelines, hold support, and start to work its way back up to these highs at 122. Okay. We'll wait and see how that goes. Now we'll just get onto the Bitcoin. Let me just change something here. Get over to Bitcoin and Ethereum. They're under the pump. You can see it's back below that 20,000 mark. Now, I think a lot of people are getting caught out with this. A lot of the crypto traders, I mean, in essence, they're new traders and they've been around for a while now, but to the markets, and seen different cycles, sell off and all that, different market cycles. They're new, and they've been talking up Bitcoin up to, when they're talking here, it's going to 100,000, failed. Okay, okay, just buy the dip. It happens all the time. Sometimes dips don't come back. I mean, you got to be careful, and that's why you got to trade the price action. You're not trading what you read on Twitter or what you think, because that's just been biased one side. And if you bias one side, either up or down, yeah, you can get lucky and it can get right. You're biased up here, great. If you're biased up here, you're under pressure, same. Biased up here, great. Biased down. And if you've been buying it around these levels and you buy it at 20,000 and you're seeing this, who's to say it's going to hold up at 19,000? Everyone knows stocks. If you're a stock trader and you've been buying the hype on a small miner, you can see this kind of thing that it can come down and it can settle down on its lows for years. Okay, I've been caught in some many times. Okay, and you think it's going to go up, but then they go from the hype, they go and they have to prove themselves. Yeah, it could be a great stock. You might have to hold it 4 or 5 years once it starts to prove itself and starts to rally again. But that's not what you want to sit through. You're better off being out and rebuilding a position at lower levels. Okay, so Bitcoin at the moment is heading south. It's this 1900 level. To me, we're looking like we're holding a lower high. Could pressure down lower. Who knows? Okay, Ethereum, you're looking at much the same action. It's smashed down. We had a bit of a bounce here, and we're holding through this level at say 1256, and we're looking to extend down to lows. Now for Ethereum, you've got this leg down, you've got this bit of a bounce back up to 3610, and we've got the secondary leg down which I drew up. So that's equal. So this leg down, this is equal, and you're just looking for that retracement. Once it starts to find resistance, then you're extrapolating that out to see where it could go to. And it's we've held that level quite a while, and it looks like it's pushing into there. We don't know if that's going to be the base. It could go through that. We don't know at the moment, but that gives me some idea of where the market could head to on a bigger picture, a bigger structure. So that's pretty much at the moment what I'm looking at. Bonds, they were back down again on a daily basis. Just go down to the 30-minute charts. They're heading down at the moment. Whoops. Okay, they got sold off. They have been ramping back up. So you've got this sort of bounce back up of bond yields. Down in bond yields, back in bond prices, which is probably the market. They're searching for sort of that equilibrium level with regards to interest rates and inflation. Now, if the Fed come out, they're all going to be sitting around waiting to see what the Fed do, what sort of hike they give you. Okay, if the inflationary numbers are coming out and they're stabilizing, they're quite high, they're staying high, and the Fed doesn't come out and start to knock it down a bit with some more aggressive rate rises, then bonds will, if they don't do that, bonds will probably head south again. I think the yields will start to pick up and start to pressure down again. So at the moment, they're just trying to, while they're waiting for the Fed, they're squeezing out some sellers. Okay, so that's pretty much all I wanted to go over. Won't look at the currencies. You can work through the currencies yourself, but at the moment, it's about dollar. The US dollar's hovering up there. Bonds, you can see, have bounced back a bit, so the yields have come down a bit. But all in all, stock market's in a downtrend. That's not so great for bulls. We don't know where it's going to, so no need to be diving in left, right, and center and buying a bargain because they can get to be more bargains, be more of a bargain down the track. Never try to pick the bottom. Always try to buy on the rise, sell when it's falling. Okay, and you're just trying to pick it off the structure for your prime entries. Once you get your entries intact, you can really start to refine your entries. Then your risk reward becomes a lot better. Okay, and you're not going to get stuck in it. If you're buying sort of here just before it sells off because you think that's support, bang, you get hit. Okay, so you're trying to find you're buying in those zones where you're not under pressure. You know where your risk is, and if you know where you're going to be wrong, you get out. You start again. Okay. And that's going to really improve your probability, really improve your risk reward, really improve your results. All right, that's all I want to go over, guys. Have a great weekend, and I'll speak to you in our Discord channel. We'll just chat through there, post a few things a bit later on. But yeah, enjoy yourself, and we'll speak to you again soon. Bye.